U.S. job growth continued a now familiar pattern. Despite better-than-expected job numbers in May, the Labor Department said there were 12,000 fewer jobs added in April and March. Still, American Bankers Association Chairman Scott Anderson called the job numbers encouraging.
175,000 jobs created is an encouraging sign of improvement in our labor market, particularly the job growth we saw in restaurant sales and retail suggests that the consumer and consumer spending is hanging in there despite the spending cuts and tax hikes.
Despite government spending cuts due to the sequester, the Banking Association sees strong support for the economy from consumers and a much improved housing market.
The housing market, we believe, has finally caught up with the broader economic recovery, and the wealth effect created from rising home values will be a much more important boost to consumer confidence and spending.
That confidence is critical for investors. Global markets surged Friday, even as the unemployment rate inched higher to 7.6% as more Americans started looking for work. But economist John Lonsky at Moody's Capital Markets says stock prices rose on expectations that the U.S. Federal Reserve will keep interest rates at historic lows.
That increase by the unemployment rate reinforced expectations that the Fed's zero interest rate policy as it relates to short-term interest rates, bank deposits, money market funds might well remain in effect until the middle of 2015.
Economists say low interest rates help boost spending and promotes investment. The U.S. Central Bank says it plans to keep interest rates at record lows until U.S. unemployment falls to 6.5%. But analysts say interest rates are likely to rise sooner. Arcega, VOA News, Washington.